How's it going, everyone? It's Sam. We have a Bitcoin hedge fund manager that is talking to three different CNBC hosts trying to explain where Bitcoin's going in the future. The hosts are very skeptic, so I want to walk you through that video today, or I want to play it for you, kind of give some of my thoughts on it. We also have some big news sprinkled in throughout today's video. I'm going to give you some of the news in between clips from CNBC. But if you don't mind, before we get started, hit subscribe, turn on the bell notification underneath the video so you can see future videos just like this. There's also going to be a link to Margex underneath the video and over to CoinW as well. In case you want to start trading cryptocurrency, you can use one of these two different exchanges.
Join us right now on this, the halving, and so much more. Anthony Scaramucci, Skybridge Capital founder and managing partner. Please weigh in. We saw you weighing in on Twitter over the weekend when I think a lot of folks were trying to figure out what was going on. We've seen Bitcoin fall since that weekend and effectively stay where it is despite where equity markets are. It's trying to understand sort of these price movements.
Well, I wish I could understand the price moves myself. I think where I'm coming from is a little bit of the longer term as opposed to just the week-to-week or day-to-day price movements. I think the point I'm trying to make is that Bitcoin is on an adoption curve. If you go back to Web 1, Bitcoin is sort of in the 1999 point in the spectrum. And so just imagine where we went from Web 1 to where we are today. And so my point is you won't see this be a inflation hedge or a store of value, as other pundits are saying, until you get over 1 billion users. And so right now, it's going to be way more volatile than people like, and people look at it as a risk-on or risk-off trade until we get to that adoption curve.
So there's a good point being made right there. This is a high risk, high reward, in most people's minds, asset. It's a high beta, right? You're not buying this because you want it to go up 3% a year. This is not gold that's going to stay stagnant for 5 years. This is not cash. This is something that's going to have high volatility. He says until it's much larger. Now, something that could be making it much larger, this was just announced. USDC stablecoin on Ethereum and Solana for Stripe payments. Stripe, just in the US, has 739,000 active websites, or 56% total. Global, they are used by 46 countries with 2.72 million websites, some of the biggest companies in the world. Now, they announced this. They've done this in the past, too, back in 2018. But now they're talking about instantly settling on-chain and automatically convert to fiat. Now, I've seen other people talk about this too, and to be clear, this is Stripe, not Strike. Strike is the Jack Mallers company. But I actually saw Strike, Jack Mallers, talk about using the Lightning Network for instant transactions, basically cutting out the middlemen, having instant finality, and also it just goes through the Lightning Network, then converts back to fiat like right away. This is much cheaper than charging 2 or 3%, 4% for credit cards. I actually paid 4% today to use a credit card. So yeah, I can understand why they'd want to get into this, and the whole industry is much more mature. So obviously crypto was a much different beast back in 2018, right? I mean, that was also the bear market. Now we're going into the bull market. Companies are a lot bigger. You have BlackRock coming in the space of decentralized money markets. So the game's a little bit different. This will onboard a lot of people, though, to crypto, right? Even if they don't know it, which we'll talk more about here in a moment.
That's my point.
And given the adoption curve, what do you see right now as the upside and number, and what do you see as the downside number, call it 12 months?
Well, I mean, look, you could get shocks like wars, and you could get, God forbid, a terrorist calamity or something like that could take Bitcoin down 10 or 15%. But I think you have a heavy bid on Bitcoin because of the demand from the ETFs and from the eventual drivers of things like the wirehouses that will enter the space, as well as the 401k market. So I don't think you have 50% downside, but you could have 10 or 15% downside just because it's still a risk-on, risk-off asset. But long-term, with the halving coming this week, Andrew, right, I think this thing trades to $170,000, possibly to $200,000. And that's consistent with where it's been over the 15 years of Bitcoin.
It's so sensitive to the starting point, though. Like what you want to say, how this behaves, or what does it typically do under different environments. I just looked at a chart yesterday. Since June 30th of last year, Bitcoin has been beat for beat with NVIDIA stock. Okay, I mean, nobody's saying it's exactly the same thing, but it sort of moves along this, hey, we're investing in this big picture future. This seems to be a way to play it. The other piece of it is, if the analogy is 1999 and Web 1.0, what was the central asset that you would have bought in 1999? Bandwidth? That's done nothing but gone down in value. Like, what's the thing you're investing in?
You know, if you bought, okay, let's use Amazon as an example. Okay,
right.
And I think this is the point that Andrew is trying to make: is this risk on or risk off? Well, in 1999, Amazon was an emerging stock on an emerging technology, and it was quite volatile. And you lost 20 to 50% 8 times in Amazon.
You at one point lost 80%.
Yeah, that one time in March of 2020, it went down 80%. But if you held Amazon over that period of time, $10,000 is worth a little over $14 million today. And so and Amazon is now trading consistently with the volatility of the overall S&P 500, and it certainly wasn't
Also
doing
producing cash flow.
25 years ago.
I use a lot of Amazon. I don't use a lot of Bitcoin. Is that a problem at some point, and what do you expect to happen when we go through a dot-com bust type moment for the broader market? Does the feeling about Bitcoin shift?
I think if we go through a dot-com bust in the broader market in the next year or two, I think you'll have a price shock in Bitcoin consistent with a dot-com bust. However, if you're willing to hold that asset, which we are, over a rolling 4-year period of time, no one has ever lost money in Bitcoin.
That's a good question. If not too many people use Bitcoin, can it continue to grow, basically? And I have 2 main thoughts on this. First, you don't really need people to understand it or to know that they're using it, like what we just talked about here. There are going to be hundreds of thousands, tens of thousands, no, hundreds of thousands, millions, tens of millions, hundreds of millions of people that are going to be using this without even knowing. Like, it's just going to go from fiat to crypto to fiat. That is the whole point. People don't even really have to understand what's happening. They just are like, wow, they can offer me instant finality now. That's really cool. My fees are lower when people pay with crypto. Okay. And they don't have to understand everything. They don't really have to even know that they're using it. If the tech is there, then it's going to be adopted, right? Bitcoin doesn't need everyone to understand how to use it. They need people with money to buy it. They need people that reach a lot of people to use it, right? Imagine if everyone was using the Lightning Network, they got all the benefits of it, and they had no idea. I don't think too many people would be pissed off if they were just using Bitcoin if there's no downside to it. And right now, using Lightning Network, you know, some people would say that that's the case.
But if you're willing to hold the asset for, let's say, 5 years, John, I think you do very, very well in the asset. It doesn't have cash flow. Gold doesn't have cash flow, but it does have cash flow in a weird way, because if you treat it like cash, cash can offer you a yield in the bank. And even though we had these problems with things like BlockFi during the crash, you know, you could go to places like Galaxy, which is in my opinion, a tremendously undervalued asset, probably the most undervalued asset in the crypto space, and you could get yield in a borrowing agreement there. So you do have cash flow on Bitcoin if you think about it that way.
So they're talking about giving yield on Bitcoin. You have to be very careful about that, especially after what we saw last bear market. However, there are ways that we're going to be able to make cash flow. For example, if you don't hold the actual physical Bitcoin or the pure form Bitcoin, if you hold an ETF, you could sell covered calls, for example. I'm sure there are going to be funds that sell covered calls for you, right? That give you yield. There are going to be different ways of making money. So I'd be careful right now doing that, but there are possibilities in the future to do something like that.
So long term, I predict people will do very well. And I think that the point I was trying to make to Andrew through Twitter and here on the show is that, yeah, sure, it's 14 years old, but it's still very young in terms of the adoption.
In terms of adoption vis-a-vis the ETF, you look out your 4-year sort of time horizon, what percentage of Bitcoin effectively is owned by BlackRock on behalf of individuals versus individuals owning it themselves?
Well, it's a good question. So let's say there's 15 or 20 billion now, just using rough numbers, and the asset's got a trillion in market capitalization. And let's say it went up 5x from that. And let's say the market capitalization didn't move, it's still less than 10% of the overall ownership of Bitcoin. So this whole notion that the ETFs are going to overly centralize Bitcoin, I don't buy. I think what the ETFs are, though, is they're a great conduit for people that are used to buying
Does
them.
the ETF create more price discovery? I mean, in some ways, you think it should create more price discovery, which in some
Well, it obviously has, though, Andrew. Look, I mean, I think we were 40,
well, but in the initial
45,000
stages, the discovery will always be about adoption, so it should go up. The question is, long term, does it create a sort of different sense of discovery? And you also have to think that the people who own Bitcoin today were always true believers, right? It was sort of a special cohort of people who sort of thought about Bitcoin in an unusual way. I don't know in the future if you have a large volume of Americans owning it through ETFs, hopefully they won't all be true believers in truth. You'd want them to all think different things about it.
So there are going to be a ton of people that own Bitcoin in the future, and they're not all going to have to be true believers, right? A lot of them are just going to buy it through retirement accounts, and you don't really have to be a true believer if you're just buying it as part of a portfolio, a target date fund, right? You're just going to continue to add to your portfolio over time. Of course, there are going to be people that time the market, but there have always been people that time the market. I mean, the whales time the market. That's the whole reason that we have cycles, right? Someone is selling off a lot. So you don't have to be a true believer and hold on forever. People will do that, but I think as time goes on, we're going to have more and more people that are in Bitcoin for different reasons.
Well,
I don't know what that means.
Well, listen, I mean, you guys have a lot of skepticism on the Des. I think the skepticism is well founded. I started out as a skeptic. I think what got me past being a skeptic is the notion that this is immutable. It's decentralized in a way that makes it very powerful. The network itself is scaling. And if you think about the way we treat money in our society over the last 5,000 years, Bitcoin checks all of the boxes. The only box it doesn't check is central bank manipulation, which I think it makes it way more powerful. And so at $1.4 trillion, could this trade to half the market capitalization of gold, where gold is $16 trillion today? We believe it can. We actually think it's going to go through the market capitalization of gold. And if you're making the point that the American owners in an ETF are not going to be enough to get it there, I disagree, because over time the acceptance regulatorily is going to allow people to put it in the portfolio. A 1% position in these global portfolios takes it there.
There it is. Bitcoin could be bigger than gold. I think we would all be very happy if that were the case. Bitcoin would be moving up into that 1.2, 1.4, 1.5 million dollar range. And, in my last video, I talked about how Bitcoin will be a status symbol. It's going to be huge if you hold the Bitcoin. If you haven't seen that video, you can check it out on the end screen. But yeah, we do have more people. May ignore that. We have more banks, more people buying Bitcoin, and that's going to continue to happen. Yes, there are going to be some off days. Like, for example, today, IBIT didn't buy any Bitcoin for the second day in a row. And GBTC sold $140 million worth of Bitcoin. So there are going to be days like this where we go down, right? Maybe not the price of Bitcoin, but the ETF flows go down. It changes everyone's minds. But over time, there's going to be much more adoption. I can guarantee you that. Now, let me know your thoughts underneath the video. Do you want more videos like this where I cover someone's interview, right, on CNBC? Let me know in the comments section. Again, you can check out the link to Margex and to CoinW, and I'll see you in the next one. Bye.